Daily cycles with update on October the 28th. So hallelujah, we rally on. We broke above this trend line, back tested and rallied again, and let's see, we are above the 70-day moving average calendar days. That should be about the 50-day moving average in trading days. Retraced almost 50%. We are around the low here from September. So it doesn't look, I really don't like this regarding the bearish case here. Although, well, remember my 4-week cycle, it had worked perfect for several years, and then something was strange here around May, and later in the summer I concluded that the cycle had changed. It had shifted around April. It was a change in the solar wind. After that, the cycle worked perfect. Remember, it made a lows on spot on the exact day, more or less. And here I think I said something like, this cycle normally doesn't work this well. It soon has to fool us, and wow, it did. So we had a bullish phase where we saw sabotage, that means weakness, and this weakness should have materialized in capitulation when we entered the bearish phase, but we did not. It was oversold, it was a bear trap, and we inverted. We started to rally in the bearish phase, triggering all this cascade of buy signals, and I think today was the last one with a close above the 50-day moving average. So my cycle is now bullish, and although my cycle didn't work here, my cycle normally works, in 95% of the time. But I know sometimes this cycle can merge into a larger cycle, and we can make a top at the cycle low, another inversion. So I don't like hoping on that. I really don't like betting against this cycle. So it favors upside for 1-2 weeks, perhaps. But this 10-week cycle, I was not aware of this that well. Neither the 20-week cycle. Those I have more or less discovered lately. I knew about this cycle, and I knew about the 40-week cycle, but I wasn't that aware of the 20 and 10-week cycles. But so obviously the 10-week cycle has worked bullish on the market, and now let's see, the 20-week fixed cycle is here. But in Hurst terms, that this may be the 20-week cycle low. Well, it's all confusing. Well, let's have a look at something else. Here we broke the 80-week offset, and backtesting, it makes nice downside projections. So it now has a downside projection to below 3000, and we have to break above it to cancel that signal. But look how we now backtested this broken trend line. Does it mean anything? I don't know. And my 7-year cycle, well, the crash phase is now over, more or less, and I was really hoping to see a bit more capitulation below this June lows in this period, but we didn't get that. Still the cycle is going up a little bit here where we are now, and then continuing down, so it still favors downside. But well, let's switch over to this one. The bear market, the historical bear market that resembles today's situation the most, is the one from 73, 74, 75, around there. So this is aligned by the cycle. It's not aligned by the top, but where we are in the cycle today compared to that time in the 70s. So it's not perfect correlation here, but here it looks really well. I haven't done any adjustments here to make this fit. It's just aligned. It starts on the same cycle day, and then yeah. So well, it's very similar. So could repeat. So what has to happen to make this bullish? Well, I really I don't like seeing us going much higher here. That weakens the bearish case a lot, I think. But to make this bear market over, we have to break the well, my final signal is breaking the, what is this, the 40-week offset. So breaking above this one. So we have to get up to the trend line, the 200-day moving average, break above, and later break above this offset. Then it's a bull market for 2 years. But doesn't look right. I have call it a pattern recognition. So this is made out of pretty much all, well, going back say 100 years. This is bear markets that have a big ABC pattern. That means they have a durance of, well, let's see, at least, what is this, 1.5 years or something. So you have some short bear markets. Many don't call them bear markets, but we call them major cycle lows. But and those are over in, well, less than a year. But this is made of the average by pattern recognition, an average on how they look. So you have a A, and then a more sideways B, and then a capitulation C. And very few bear markets also have had a D and an E here, a very prolonged bear market. So anyway, here you see I have a channel, and in red is the current situation. So we were a bit higher on the top, a bit euphoric, and here we were very low in June. And this pattern recognition can adjust a bit to the right or left when I get more data in here. So perhaps it could shift a couple of weeks. This is weekly data. But from this we see the down leg from August was very steep compared to the channel I have drawn. So this bounce back actually takes us back into the channel. And the channel says we should go sideways here. Well, how many weeks? That's almost 10 weeks, 2 months. What's that? So November, December into January. Sideways into January, and then we get the capitulation phase, which could prolong into the fall, but could make the final low, in March, April. And that's been my scenario all the time. I look for a low around March, April that could extend into August, September. So I really would not like to see the market going above this channel. Then something is wrong here. I can be wrong. So, and I may be wrong, but yeah. So as long if you now see us going down and we go mostly sideways here, I'm having a cycle low around early December. We should go down there, and then we have a cycle high early January, and then we should go down. So let's see. See ya.